Irdina Harisal, a passionate and determined entrepreneur with a dream to bring style, modesty, and identity together through fashion. With a keen eye for design and a heart for business, Idina took her first bold step and founded Dina Scarf Sundaram Berhad, a small and medium-sized enterprise focused on producing high-quality, stylish scarves for modern women. But wait, did you guys know what is SME?
In Malaysia, the official definition of SME is provided by SME Corporation Malaysia. This classification is not just for record keeping, it plays a critical role in helping the government design policies, support programs, and measure economic performance across different business sectors. So, how exactly do we define an SME? The answer lies in two main criteria, which is annual sales turnover and number of full-time employees, but a business only needs to meet one of these two criteria to be classified as an SME. Now, let's break it down by sector. First, the manufacturing sector. This includes businesses involved in producing goods like factory or industry plant. A small manufacturing enterprise is one with a sales turnover between RM300,000 and below RM15 million, or it has between 5 and 75 full-time employees. A medium manufacturing enterprise has a sales turnover between RM15 million and up to RM50 million, or employs between 75 to 200 staff. Next, the service and other sectors. This includes a wide range of industries such as retail, hospitality, finance, construction, agriculture, and more. A small enterprise in this category earns between RM300,000 and below RM3 million, or has between 5 and 30 workers. A medium enterprise earns between RM3 million and RM20 million, or employs between 30 and 75 full-time employees. However, there are even smaller businesses like food stall, online seller, or home-based service. They usually earn less than RM300,000 a year and employ fewer than 5 full-time workers. In fact, micro-enterprises make up more than 3/4 of all SMEs in Malaysia.
In the heart of a growing fashion district, Dina Scarf was ready to take the next big step, seeking financial support to expand its operation. The company submitted a loan application to THO Bank. However, despite the potential of the business, THO Bank was unable to proceed with the loan request. After reviewing the proposal, the bank found that the submitted information was incomplete. Key financial documents and business projections were either missing or not detailed enough. As a result, THO Bank had no choice but to reject the loan application. Did you know why some Malaysian SME struggle to get the bank loan?
First of all, because of lack collateral and creditworthiness concern. One of the most common challenges faced by small and medium entities SME Malaysia when applying the bank loan is their inability to provide adequate collateral or demonstrate strong creditworthiness. This issue is particularly evident among micro-enterprise, small business, and new startups which often lack sufficient tangible asset or established financial history. Banks and other financial institutions require collateral such as land, buildings, or machinery as a form of security to reduce the risk of default. Without this, many SME are deemed too risky and their loan application is either rejected or approved at less favorable terms. Collateral remains one of the primary elements in risk assessment by financial institutions. In fact, the article have highlighted that it's often the first and most critical factor considered during loan evaluation. It provides a bank with a form of legal assurance that they can recover the loan amount if the borrower defaults. Unfortunately, most SME operate on limited resources and may rely heavily on rented permits or borrow equipment, leaving them with little to no collateral to offer. Additionally, SME may lack a formal credit history, particularly if they have never accessed financing before newly established. With a proven track record of repaying loans or managing financial obligations, banks find it difficult to assess the SME credit reliability. To address this, banks often use the 5 C's of credit: capacity, capital, collateral, condition, and character as a comprehensive framework to evaluate a borrower's credit worthiness.
Secondly, poor financial management and lack of transparent records. Another significant obstacle for SME in obtaining bank loans is the lack of sound financial management and transparent financial records. Many SME, particularly smaller or informally operated business, fail to maintain proper bookkeeping system or generate detailed financial statement. As a result, they are unable to provide the necessary documents such as balance sheet, income statement, and cash flow report that bank require to evaluate loan application. Poor financial discipline often leads to cash flow problems, inadequate working capital, and overall lack of financial planning. This weakness creates uncertainty about the business ability to repay its loan on time. Furthermore, many SME do not prepare annual budget, perform variance analysis, or track expense accurately. This lack of internal financial control raises red flags for banks, which are tasked with minimizing their exposure to non-performing loans. Transparent financial reporting is crucial in building trust with financial institutions. Without clear and verifiable records, banks may perceive the SME as being disorganized, untrustworthy, or even potentially fraudulent. As such, the absence of financial clarity and accountability can become a major barrier in accessing formal credit. Additionally, many SME owners lack financial literacy or do not employ qualified accountants to manage their business finance. This knowledge gap contributes to error in financial reporting, incomplete documentation, and missed opportunity to improve financial health. Some SME also operate partially or fully in the informal sector where cash transaction dominates and financial documentation is minimal, further complicating their credibility in the eyes of lenders.
Last but not least, because perception of high risk and limited credibility by financial institutions. Financial institutions, including both conventional and Islamic banks, often perceive SMEs as high-risk clients due to their limited size, market presence, and operational capacity. Compared to larger, more established companies, SMEs are considered less structured, less stable, and more vulnerable to external shocks, such as economic downturns, regulatory changes, or supply chain disruptions. This perception plays a critical role in discouraging banks for lending to SMEs, thereby widening the credit gap. This risk aversion is often based on SMEs' lower survival rates, limited diversification, and dependence on a small customer base. For instance, a small food beverage company may depend on one or two major clients or a single location, making more susceptible to financial instability if any one factor fails. Banks prefer borrowers who demonstrate good corporate governance, maintain transparent records, and possess strong internal controls. Unfortunately, many SMEs fall short in this area. As a result, they are ranked lower in terms of lending priority. Furthermore, the credit assessment tools and scoring system used by banks are often designed with large corporations in mind and may not fully capture the unique context and challenges faced by SMEs. This mismatch leads to unfair assessment where SMEs are penalized for their size or informal practices, even if they are operationally sound and have growth potential. Many SME owners report that the financial system favors bigger firms, leaving smaller businesses at a disadvantage despite their contributions to the economy. To bridge this gap, there is growing call for the adoption of alternative credit scoring mechanisms such as behavioral data analysis or transaction history to better reflect the true financial health and potential of SMEs. However, the perception of high risk and limited credibility will continue to hinder SMEs' access to crucial financial opportunities.
As we all know, the global economy in 2025 is expected to be quite challenging. Rising inflation, global conflict, and market uncertainty are putting pressure to businesses, especially small and medium-sized enterprise or SMEs. In response, Malaysian government has introduced several strategic measures under Budget 2025 to help SMEs survive and grow in this difficult environment. Let me explain 3 key initiatives aimed to support our local SME. First, expansion of financing and credit guarantees. The government has allocated up to RM40 billion to assist SME through loans and credit guarantees. These include RM20 billion under the Syarikat Jaminan Pembiayaan Perniagaan (SJPP), as well as other financing program offered by Bank Negara Malaysia and Bank Pembangunan. This funding played a crucial role in helping SME maintain their cash flow and continue operating smoothly, especially when times are tough. With these guarantees, SME can access financing more easily and reduce their risk of failure. Second, support for digitalization. To help SME modernize and stay competitive, the government is encouraging digital adoption. They have introduced the SME Digital grant worth RM50 million and a BSM vendor grant to support small vendors. This grant help SME adopt digital tools like accounting software, e-commerce platform, and automation system. By doing digital, SME can improve their efficiency, reduce operational costs, and reach more customers even in a slow economy. Third, sector-focused incentive and export support. The government is also focusing on helping SMEs grow in key sectors and expand into international market. There is an allocation of RM650 million to support micro-entrepreneurs, women and youth-led businesses. In addition, RM1 billion will be channeled through Exim Bank and Metrate to help SME expand globally. Their support include tax incentive, export financial, and programs to help SME integrate into global supply chains, opening more opportunities while reducing reliance on the local market.
In conclusion, the Malaysian government is taking firm steps to protect and empower SME in 2025. With more access to financing, strong digital support, and targeted export incentives, our SME are better prepared to face economic challenges and continue contributing to national growth.
To the riptide, taken away to the dark side. I wanna be your left-hand man. I love you when you're singing that song, and I got a lump in my throat 'cause you're gonna sing the words wrong. Is this movie that I think you like? Just gotta decide.